Good afternoon, everyone. Good afternoon to the Elite Familia, the Orange family. Thank you guys for joining us today. Thank you to newcomers as well for joining us on this lovely Friday. So I want to start off by saying that unfortunately our lender friend was not able to make it today, but he is going to come back and retouch on this subject in the future. With that, we're going to focus on 1% programs and just first-time homebuyer programs and zero down, right? A lot of these first-time homebuyer programs and 1% programs kind of all offer essentially the same thing. It just depends on the lender and on their stipulations as to how they offer it, right, for you guys. I mean that in the sense of sometimes the three categories that you have to look for when it comes to first-time homebuyer programs are 100% financing, DPA, and grants, right? So these three things can range in the way that you are receiving them, mainly because if you're getting 100% financing, for example, with the lender, that means that the lenders are giving you 100% financing. This is not any type of assistance or any type of repayable second lien that you have to give or anything like that. It's strictly with the bank, right? And typically when they offer those 100% financing programs, the banks will keep your loans in their portfolio, depending on the lender and how they do things, right? That's to the side. When it comes down to DPA, which is TSHAC and more of like government assistance, now directly with the bank, they do what is a second lien or a forgivable lien. And the difference between the two is that with forgivable liens, they give you a set time period, 3 or 5, 7 years, to live in the house and not have to pay back that assistance that you received as a down payment, right? Compared to with a non-forgivable lien, you will pay that back in a matter of certain time or at the end of the loan, depending on how the lenders structure it. The pros and cons of that situation is that you'll typically have a better mortgage payment or a lower interest rate if you do take on a DPA that is non-refundable or that is refundable, that you pay back as the second lien, right? The interest rate will be lower. Now with the grant, it's typically what it is free money. It's all either an investor or the bank or a government program that is specifically stipulated as a grant, right? So when it is a grant, that means that money is completely given to you for free. You qualify for a certain area, a certain amount of income to receive that free money. So whenever you hear the word grants, that is great. That's the best thing you can hear. Now, when it comes to these 1% programs, the biggest thing about them is that it'll either be a grant or it'll be a down payment assistance. Typically, it's usually a grant, and the grant will either come from the bank or an investor. And there's many 1% programs that are out there. Now, what makes this one so special and why I wanted to touch base with you guys on this, because they're not offering PMI. Now, PMI is a big thing that you have to pay attention to when it comes down to these first-time homebuyer programs. Mainly because when you don't put down 20% on any loan, you will be hit with what is private mortgage insurance, right? And with that private mortgage insurance, that just depends on the range of your loan and how much the house is. But let's say it's another $150 to $300 on your monthly mortgage just for not putting 20% down. But at the same time, these mortgage payments do tend to be favorable depending on how you're looking at the perspective of the matter. Like if you're looking to save more money up front, you know, you don't mind paying that on the back end because of the fact that you're not having to put so much up front to purchase the home, right? Compared to if you want a better mortgage payment, then you will go the extra mile to save more money for a down payment and pay more attention to the interest rate, things like that with PMI. At the end of the day, it all comes down to your connections and who you know. A great realtor needs a great lender. It's bread and butter. You can't have a great realtor and him not have lender connections. If you have a realtor that doesn't have lender connections, I would stay away from that realtor. Mainly because, I mean, these lenders, they have like all the programs that are out there. I mean, anything that you can think of, it's just a matter of going and talking to these lenders, making relationships, going anywhere and everywhere to speak to as many lenders as possible, because some lenders just don't have the marketing or the social effort to put themselves out there for great programs, right? So that's why realtors are so essential to lenders, right? And the more lenders you know, the more opportunity you may have for a better loan, right? I don't know if we have any questions at the moment.
No questions at the moment.
Okay. Guys, I apologize though, but we will get this set up again. One thing that I did want to touch on before I let you guys go, in the past we had a program that was a 0 down, 0 PMI, which was crazy. I mean, that's like, I haven't seen any other loan product like that out there. That bank, which was Southstar Bank, ran out of the funds to continue with that product, but it will be coming back in January. Now, I say ran out of funds because at times these products that these banks will bring out to outproduce their competitors, they can't necessarily keep them going all the time, right? So it went so well with Southstar Bank that they have decided to revamp this opportunity in January. So please stay tuned to hear more. And thank you guys for stopping by. And remember, your favorite realtor here, Daniel Gonzalez. My phone number is 512-590-0740. Please don't hesitate to reach out if you ever have any questions, comments, or concerns. And remember that ELIT is here to walk you guys through any and all transactions when it comes to real estate.
Thank you.
Woo! Thank you.